Hey guys, what's up? Alec back with the daily stock market and huge green day on Friday. Here we can see a lot of stocks were up over 5%. However, we did have Snapchat down 28%, so don't forget about that. It could put a damper on earnings season coming up. And in this video, we're going to be talking all about earnings season. We have a lot of great companies coming up, so subscribe with post notifications on, share this video with a friend, and let's jump right into the video. And remember, the place to be subscribing on is YouTube. And if you're already subscribed, make sure you hit that notification bell so you're alerted anytime we post new updates. So huge earning week going on. 75% of the S&P 500 is going to be reporting earnings this week. We have before the open, Philips reporting. After the close, Logitech reporting. Discover reporting. So not much going on as far as Monday goes. If we move over to Tuesday, we have UPS and GM, Coca-Cola, which are three huge companies reporting earnings all in one day. So you better be ready for that. With gas station Valero, 3M, JetBlue, and General Mills all reporting before the open. And if we move over to Tuesday after the close, we have Microsoft, Alphabet, Google, Visa, all in just one day after the close, not to mention Enphase Energy, Spotify, Skechers, which isn't really that important, Chipotle, all on Tuesday. So Tuesday is one of the biggest earning days coming up. If we scroll on over to Wednesday, we have Boeing, Wastemaster before the open, we have Kraft, Hilton before the open, Harley Davidson, Wingstop. If we move over to the close on Wednesday, we can see that Facebook Meta is going to be reporting, which is going to be a very important earnings. We have Ford reporting, another very important one. Teladoc Health. So we have another exciting earnings day, Tuesday and Wednesday. Needless to say, both extremely exciting. If we scroll over to Thursday, it's equally as exciting. We have before the open, Shopify, McDonald's, Caterpillar, Southwest, MasterCard, Comcast. After the close, we have Apple, everyone's favorite stock. And this is going to be a very important earnings day Thursday after the close because not only does Apple report, but Amazon also reports. So that's going to help dictate where the market's going to continue to go into future weeks. We have Intel also reporting and Pinterest, T-Mobile, which is one of the biggest carriers for network coverage of cellular phones. Moving over to Friday, we have ExxonMobil, Chevron, NextEra Energy. So it's an exciting week to say the least. So many companies are reporting. It's chock full. There's going to be a lot of options, opportunity plays. A lot of companies are going to beat earnings and a lot of companies are going to miss earnings. So you definitely want to be on the right side of the coin majority of the time. Reach out to me on Instagram if you want to see exactly what calls and what options I'm playing, what puts I'm taking out, and access to all my trades and all my plans to make money on the stock market this week and earnings season this week as well. So first stock up we have to talk about in this video is going to be Microsoft. We can see in the last month they're pretty much flat, going as high as $250 per share and as low as $225 per share, falling around 10%. Now, if we scroll out to the last 3 months, we can continue to see that the trend has been down 8% in the last 3 months, and they were as high as $300 per share just in August 2022. Now, if we go to the yearly chart, we can obviously see the downward trend is just continuing. But that's like most stocks in the stock market right now, so it's not too surprising. However, the weekly chart looks like they are trying to bounce back. So with earnings season coming up, Microsoft is going to be one of the most interesting ones to talk about with a $1.8 trillion market cap. It can definitely move the S&P 500 just like Apple and Amazon can as well, are going to be some other very interesting ones. Microsoft right now is valued with a PE ratio of 25, implying that it's a pretty good deal right now. Okay, here we can see that Microsoft reports Tuesday, October 25th. Wall Street expects Microsoft to earn 2.31 per share on revenue of 49 billion. 0.73. This compares to a year ago quarter when earnings were 2.27 per share and revenue was 45 billion. But what do we want to be watching specifically for Microsoft earnings? The market continues to remain broadly bullish on Microsoft, particularly for this quarter ahead of its fiscal year 2023 Q1 earnings report. The company's fast-growing cloud platform and the intelligent cloud business are cornerstones of what is expected to be another banner year. Microsoft forecasted a revenue range of 20.3 billion to 20.6 billion in intelligence cloud revenues in its first fiscal quarter. Of that total, the midpoint assumes 20% year-over-year growth compared to revenues of 17 billion in a year earlier period. Just as impressive, Azure and cloud services grew revenues 40% year over year in the last reported quarter. Likewise, investors expect Azure to have sustained strong growth in the just ended quarter. That's not the same for the PC business, however. Tech research firm Gartner estimates PC shipments to have declined roughly 20% just in the third quarter alone, which could pressure Microsoft's personal computing business and possibly its Windows revenue, which declined 2% year over year in the last quarter due to inflationary pressures, supply chain challenges, and a slow PC market. Nevertheless, these headwinds aside, Microsoft still has plenty of growth runway ahead from these well-established trends. On Tuesday, the company's guidance will gauge how confident management feels about its potential growth and compatibility. On Tuesday, the company's guidance will gauge how confident management feels about its growth potential and the company's ability to navigate through these challenges. So overall, earnings does look bullish for Microsoft, but you shouldn't just stop there. That's the tip of the iceberg when it comes to research. I like to do typically 2 hours or more per company on research, and there's a lot of different companies reporting this week. So the best thing to do is just pick 1 to 2 per day to focus on. So Microsoft is definitely one of them that I'm going to focus on. Apple and Amazon are also ones I'm going to be focusing on. Facebook as well, and a few others. Now, another one that we're going to talk about in this video is going to be Google. All right, I like to talk about GOOGL, but GOOG is the same exact thing, 100% the same thing. You just don't have share voting rights when it comes to voting, but probably anyone watching this video is not going to be voting in anything anyway, so therefore they're 100% exactly the same. So now if we pull out to the 3-month chart, we can see that Google is down 8%, and the 1-year chart, Google's down 27%. There could be buying opportunity here. I'm dollar cost averaging pretty slowly in right now. My average cost is 108. I want to get that closer to $95 per share, or even lower than that, even $85 per share. But we're going to be talking about earnings in this video, not necessarily price targets to be swing trading or long-term trading. If we scroll down, we can see that they have a market cap of a 1.3 trillion. So again, this can move the S&P 500 if they have a big movement down. The PE ratio is 18, implying that it is a better deal than Microsoft right now. And here we see an article, will Q3 earnings boost Google stock? Trading 33% off its highs. One company investors will want to keep an eye on when it reports Q3 earnings on October 25th is as Alphabet Google. This will also be Alphabet's first earnings release since its 20-to-1 stock split in July. Alphabet shares are broken into 2 classes, Class C and Class A, with the difference being the latter having voting rights. Google's earnings will give another perspective as to the effects of the slowing advertising revenues as the markets have to cut back their spending during the economic downturn, which was shown by Snapchat's earnings. Alphabet or Google relies on a significant amount of ad revenue, similar to social media companies like Snapchat and Twitter and Facebook or Meta. Okay, Wall Street will certainly be monitoring profits from Apple's core business, Google, with the majority of its revenue coming from advertising. Continued growth in Google Cloud will also be significant, and YouTube's ad revenue will provide further insight into the state of advertised spending. Because YouTube is one of advertisers' favorite platforms to advertise on. Advertising dominance, Alphabet or Google was leading the platform in the US digital ad spend in 2021, outpacing Facebook, Meta, and Amazon. Google controlled an estimate 26% of the nation's total line ad market. YouTube has also shown Alphabet's dominance in producing massive ad revenue. In Q4 of 2021, Google's YouTube ad sales alone topped Netflix total revenue for quarter at 8.6 billion last year, which is an insane thing to think about. Last year, YouTube brought in 29 billion in ad revenue, up 46% from 2020. So that's insane growth on just YouTube alone. I'm super bullish on YouTube alone also. That's why I love Google. Not only do they own Google, they own YouTube and a lot of other things as well. So the growth of YouTube will also probably show up in this quarter earnings. Okay, so that's something to look out for. Okay, here we have a Q3 outlook. The Zacks consensus estimate of Google's Q3 earnings is $1.25 per share, which would be a decline of 11% from Q3 2021 or year over year. Sales for Q3 are expected to be up 9% at 58.35 billion. This is an indication that operation costs are weighing on Google's profits, which will also be showing in the earnings. So their EPS is at risk of missing. Along with ad revenue, investors will want to monitor Google's cloud segment closely during the company's Q3 release. Last quarter, cloud revenue grew 36% to 6.275 billion, but had an operating loss of 858 million, which was up from a loss of 591 million during Q2 2021. Earnings estimates for the period have gone down from $1.35 at the beginning of the quarter, which is not a good thing because they were supposed to be doing $1.35 on EPS, and now they're predicted to only do $1.25 per share. Okay, year over year, Google's earnings are expected to decline 9%, but rise 14% in fiscal year 2023 at $5.80 per share. Wow. Top line growth is expected with sales projected to be up 11% this year and rise another 10% in fiscal year 2023 to 260 billion. Wow. So that does indicate, that last paragraph that we just read, it really does indicate that we should be buying the dip on Google. 2023 is projected to be a very big growth year for Google, and the shares are down 20-30% from highs right now. So it could be a good opportunity to buy the dip, especially if they dip further with earnings news coming out. Performance and valuation. Year to date, Google is down 30% to underperform the S&P 500's 24% down as economic conditions have been harder on tech stocks. However, over the last decade, Google's still up 499% to crush the benchmark. And here we see the bottom line. Alphabet's Q3 earnings will be much anticipated for insight into the tech giant's performance as inflation concerns accelerate throughout the quarter. Wall Street will have a scope on Google's earnings to see how the most visible online platforms are being affected by rising inflation and economic uncertainties, and if people are wanting to stop advertising more, big companies specifically. Okay, and if Google's being hurt by that, if YouTube's being hurt by that, we really want to see YouTube numbers being strong and coming in strong for YouTube advertising as well. Google currently lands at a ranking of 3, which is a hold, and its fiscal 2023 outlook looks promising despite the challenges the company faces this year. So I hope you guys enjoyed that video. I come on here and give you guys my thoughts for earnings on individual stocks. Just comment what stocks you want me to talk about below, because I'm going to be making another video very, very soon, and I want to talk about the stock that you recommend. And if you like this video, just drop a thumbs up on this video. Subscribe. If you're already subscribed on YouTube, hit those post notifications so you're alerted every time I post a new video. And if you want to join that close friends list, I have a few more spots available for the yearly option, which is the best discount available. Few more spots available for that. Click success number 6, success number 5. Check out some of those stories. Go through, spend at least 5 minutes and read through some of these success stories and results that people have been having. Right now, we have earnings season upon us, so it's going to be super volatile. It's a great time to join. You can easily turn $100 into $500 or much more than that. So follow along the journey. Subscribing is free on YouTube, And thank you guys so much for all the love and support. I'll see you in the next video. Remember, don't time the market, buy the market. Peace.